what we call oil crisis are crises of supply, crisis of trade, not crisis of production. Naturally, reserves at single oil fields can run out, but for this generation, oil will continue to be widely available to producers globally. We are still far from an oil route, when countries and companies will have to bargain to get their hands on the last barrels of oil. The crisis emerged before the COVID-19 pandemic, and it was worsened by it. For years, especially after the oil price fell below $30 a barrel in early 2016, OPEC and other exporting countries that are not part of it, such as Russia and Kazakhstan, have negotiated supply cuts in an effort to bring up the price of oil in the market. Essentially, the so-called OPEC Plus was trying to artificially increase the price of oil, which directly translated into higher revenues for their state budgets. At the beginning of March, the two main oil producers and exporters in the world, Russia and Saudi Arabia, met at an OPEC Plus convention to negotiate further cuts. Russia rejected the Saudi plan, and the Saudis answered with a plan to increase production instead of cutting it, which would have flooded the world market with oil, and thus pushed further down its market price. Russia flexed its muscles and increased production as well, as both countries became engaged in a political game of economic self-sabotage. As demand from China decreased because of the COVID-19 pandemic, and storage facilities filled up with oil that was too cheap to sell, US President Donald Trump intervened and negotiated a settlement between Russia and Saudi Arabia. And while they agreed to gradually decrease oil production, the repercussions of the March and April crisis will be felt in the midterm. The crisis has affected Russia and Kazakhstan more than Saudi Arabia or other oil exporting countries due to the physical nature of their oil. Russia and Kazakhstan's oil can be more expensive to extract, and its production could be more costly to stop. Oil is not the same everywhere, and it's simply not so straightforward to shrink production at fields with so-called heavier oil. Kazakhstan's oil sector was and will be affected in three ways. One, production this year will shrink, and so will profits. Companies such as Tengiz Oil and NCOC at Kashagan have already said that it would reduce production. By exporting cheaper oil, the company's profits will fall, together with the tax contributions. On exports, it is important to note that the landlocked geographic constraints of Kazakhstan, which almost exclusively allow for pipeline exports, will have another effect. In fact, in the past weeks, due to market fluctuations, it became more convenient to export via the Atyrau-Samara pipeline to Russia, rather than via the Caspian Pipeline Consortium to the Black Sea. Eastward vector towards China is also being underutilized due to issues with the quality of oil and the lower demand from China. The second way in which the oil crisis will affect Kazakhstan is that it will depress investment. We have already seen that Tengiz Oil, one of the largest consortia in the country, has delayed the completion of its expansion project, which is worth $37 billion. Several fields might become uneconomical to develop, and several contracts, especially with service companies, will be delayed or scrapped. This will have an effect on the country's budget in terms of tax revenues and tariff revenues from the most important sector of Kazakhstan's economy. The third way in which this conjuncture will be affecting Kazakhstan is that companies, both local and international, will look for cost-cutting measures, which will affect both infrastructure development and, most importantly, the workforce. Companies, from small to big, will terminate contracts or stop paying salaries. We have seen similar trends in the mid-90s and again a decade ago. These oil price crises have had ripple effect on the national economy and then on the local economies of the oil-producing regions. In these regions, the economy and the life of the residents revolves around oil. These effects will likely have consequences on the value of the tenge, which already took a hit against the dollar when the OPEC plus battle started in March. The global energy market will be affected in the midterm because oil price swings don't affect economies overnight. The lack of consumption, as people are not flying or driving and as industries are slowing down output, will keep oil prices low. The COVID-19 pandemic has transformed an oversupply crisis into a low demand crisis. The global energy market is also suffering from storage shortages. As oil became unprofitable to sell, several tankers at sea were kept offshore, idle, waiting for prices to recover before entering the ports. This in turn affected several ports, especially in consumer countries in Europe, in the US, and in China, where jobs were lost and cranes and trucks sit idle. Governments, especially in oil exporting countries like Kazakhstan, will have to reach into the coffers of their oil funds. They saved up money for the rainy days, and these are the rainy days. A few days ago, the government confirmed that the National Fund will transfer money into the budget. Analysts expect Brent oil prices to be back to around $30 to $40 a barrel by the end of the year. It is already around $30. So it's a matter of weathering the storm. The government has planned its 2020 budget with an average forecast of $20 a barrel, which is a conservative estimate. And we need to remember that most oil fields in Kazakhstan are profitable only above a certain price range, which is around $40 a barrel, so twice as much as the average forecast. And this means that profits will inevitably fall, with consequences on investments and job cuts. One way of dealing with the sharp decrease of state income is by cutting costs. So it might be possible that the government decides to privatize its assets at a faster pace. But so far, we have only seen announcements regarding privatization plans, but nothing really concrete. Kazakh, the state oil and gas company, has shown that it wants to continue cutting costs and reorganized its management team, cutting several high-paid positions. But this is a drop in the bucket compared to the income that the company will miss this year. To mitigate the effects of the oil crisis, Kazakhstan's government will have to do more. Economic diversification is obviously easier to accomplish at times of high oil prices and sizable revenues. Trying to diversify now will be more difficult. The so-called war economy of the combined Brent price fall and the COVID-19 crisis is likely to continue for a while and will have long-lasting effects. The economy of Kazakhstan, especially in certain regions, is highly dependent on oil extraction, and the country's elite is dependent on oil revenue. While diversification in terms of both the economy and the energy mix are paramount in Kazakhstan's political strategies, little has emerged in practice. Fossil fuels still account for most of the country's revenue and most of the energy consumed. In the first days since the state of emergency was lifted in Almaty, people are back to driving their cars and are getting impatient to fly across Kazakhstan and abroad, unless there is a systematic change in the way people and businesses behave, and as long as oil is the center of the economy. Kazakhstan, like many other countries, will not see true change.